Hello everyone, good morning. The Reserve Bank of India RBI has surprised the markets with a 50 basis point rate cuts along with a 100 basis point cut in CRR to be executed in four tranches starting from September. This is a clear signal from RBI to push the liquidity or to drive the liquidity push into the economy. So how does this cycle takes place? Let's understand one by one. Rate cut of 50 basis points. This reduces the cost of borrowing for banks, so loans such as home loans, auto loans and businesses can go ahead and borrow at a much cheaper rate, encouraging consumption and investment. And mind you, the budget that was announced, in that also we had said that the consumers will have much more money in their hand to spend. So this is kind of a win-win situation for the consumption, for the consumer to take place. The second could be the CRR cut of 100 basis point in four tranches. Now cash reserve ratio is something that banks keep aside as a portion and they must park with the RBI. Now, cutting it frees up additional cash with banks. In simple terms, more money is now available for banks to lend. The third one is timeline of impact. Since the CRR cut rate starts from September, since the liquidity injection will be gradual, meaning the real economic impact will kick in post September and may extend into early next year as well. So we have to look out for the earning results as well as the liquidity cuts that has been provided by the RBI into the system. So the second half of this financial year will take place as a key role as to how our GDP growth as well as how the stock market is going to perform. So the fourth could be boost to credit growth as banks have more money, lending picks up. This can spur growth. uh, Corporate capex, housing demand and working capital for businesses, setting the stage for economic recovery as a whole. So the fifth one is stock market reaction. While the market has partially priced in the rate cut, the real juice lies in the liquidity surge expected later in the year. Expect sectors such as NBFCs or banking, real estate, autos, and consumer durables to benefit first. And the last one is investors' viewpoint. What is the viewpoint of the investors? The rally might not be immediate, but as the liquidity flows into the economy, earnings may improve. So keep an eye on quarter three and quarter four. As I said, the second half of this financial year will play a crucial role, and especially for the rate sensitive sectors such as NBFCs and bankings. Thank you.